The harder you chase money in trading, the faster you lose it. But if you build the right systems, they make profits while you are sleeping. This got me full time and took dozens of other traders from losing to payouts. And you don't need to grind harder, have years of experience or be a genius to build them. But if you miss just one, even the best strategy can't save you. Most traders think they have an edge. They don't. They have a setup they saw in a random YouTube video and a feeling that it works. So how do you turn that feeling into an actual edge? 4 stages, and most traders quit at the first. Stage 1, define the strategy tightly. Not I buy when it looks good. That's not a rule. Every condition written down black and white. If a random person can't look at your rules and point to the exact entry, you don't have a setup yet. Stage 2, you go back through the charts and take the same setup 300 times. And the code math falls out. Your win rate, your averager. If it's positive, you got something real. If it's not, you just found out for free. Stage 3, strip the human out of it. We make the rules so mechanical, there is nothing left to decide. If A and B are true, you press C. The second the rule needs your judgment, it's not a system anymore. Stage 4, backtests are clean, the live market isn't. Spread, slippage, all of it. Forward test on demo to prove 2 things. The edge survives in reality and that you can actually run it without breaking. Because a system you can't or don't want to stick to on the long term isn't a system. But here is what nobody tells you. Even a backtested edge can stop working live. And one day you will hit a losing streak so long you won't know if your strategy died or if it's just normal variance. Guess wrong and you either throw away a winning system or pour money into a dead one for months. I will show you exactly how to tell the difference soon. But first, let's go to the second system. So now you have a real edge, but it's guaranteed to blow your account if you use the wrong risk management system. Most traders treat risk as one number. I risk 1% per trade. But real protection is 3 walls stacked. Miss one and the losing streak gets through. Wall 1, the statistical reality. Let's look at the actual math. At 40% win rate over 100 trades, the chance of hitting a 5-loss streak is 97%. Basically guaranteed. A 7-loss streak, 69%. And 8 losses back to back, a coin flip. 49%. This isn't bad luck. It's not you doing something wrong. It's math, and it's coming whether you prepared for it or not. Wall 2, the prop format. Take FDemo. They cut you at 10% drawdown. Now take that 8-loss streak from wall 1. At 1% risk per trade, you are 8% down. Basically one bad day from blowing the account, and that's assuming perfect execution, which is unlikely. At 0.7%, the exact same streak is down to 5.6%. Sounds much better. Yes, you make around 30% less profit per month, but in exchange, you don't blow your account and you keep your hair from the stress. Wall 3, the psychological threshold. Your account might survive the 6% drawdown. But do you? Because the math from wall 1 and 2 assumes you stay a robot through the whole streak, and you won't. Not if the number hurts. On a 100k account, 6% is 6 grand drawdown. You can probably see through that, but you're not here to stay in a 100k account. You spent years learning this, thousands on courses, you want the big capital, and the moment you get it, the math flips on you. Because the same calm 0.7% risk, the same 6% drawdown on a 400k account is now 24k bleeding on a normal Tuesday afternoon. The percentage didn't change. The dollar amount that makes you reach for the mouse did. So here is the rule. The more capital you trade, the lower your risk percentage has to go. By the way, around 2 years ago, I lost 300k in funded capital without making a single mistake. It still vanished. I will show you how and how to make sure you are protected against it a bit later. So you got a proven edge and a risk system that keeps you alive. But none of it matters yet, because an edge only exists on the trades where you actually follow it. The whole job of an execution system is one thing, 0 decisions while you are in the trade. But first, let me walk you through the exact points you have to lock down on a live trade right now. First, define what triggers the entry, an exact written condition. For me, it's a clear trend, clean market structure, and price pulling into the 0.764 fib. Second, define how you get in before price ever arrives. For me, it's a limit order at the 0.764. I set it now while price is still approaching. And this is the hidden edge. A limit means I decide that call it. Maybe price never even reaches it, and that's fine. It's the exact opposite of panic clicking a market order the second it gets close. Third, your stop and target go in the same second you do, no exceptions. For me, stop at the 1.05, target at the minus 0.618. Same levels every trade, no improvising. Fourth, decide your trade management before you are in, not while the money is moving. For me, once a candle reaches plus 1 hour and it's closed, the stop goes to break even. And the break even costs you nothing, but giving a winner back to a full loss is what wrecks people. Fifth, the exit is fixed before the trade exists. For me, the target doesn't move, because because call me before the trade picks a smarter target than the money on the screen me ever will. So before you ever risk real money, write these 5 answers down for your strategy. 1. What exact condition triggers a trade? If you can't write it in one sentence, you don't have one. 2. How do you enter, limit or market? 3. Where is your stop, where is your target as fixed numbers set the second you enter? 4. What's your management rule, decided in advance? Break even, partials or nothing, pick one and lock it. 5. What closes the trade? Target, invalidation, or time. If you can answer all 5 before the trade exists, you have an execution system. If you are answering any of them mid-trade, the first real pressure will wreck you. Everything so far assumes one thing, that you will execute it perfectly, but you can't. Nobody can. This is why the next systems aren't a nice to have part. They are the part that works with the fact that you are a human and you will screw up, because you have no idea if your edge is actually working or you just got lucky. And most traders answer that question with the single most useless tool they own, their memory, which remembers the winners and quietly deletes the losers. So every trader walks around feeling like their strategy is better than it actually is, right up until the account says otherwise. A data system replaces the story in your head with numbers on a page, and it does 3 things memory can't. First, it kills the small sample lie. 30 trades tells you nothing. At 100 trades, your real win rate is still swinging by a lot. You need to get to the big numbers before the data even starts telling the truth. Second, it catches the broker's hand in your pocket. In your backtest, there is no spread, no slippage, no commission. Live, there is. So you lock 2 numbers, where you wanted in and where you actually got filled. That gap is the broker tax. And third, this is the one that matters most, it forces you to tag every trade with a single yes or no. Did I follow my rules? Because that one tag splits your trades into 4 boxes and 2 of them will lie to you. A good win. Followed rules, made money. Obvious. A good loss. Followed rules, lost money. This one feels bad, but it's perfect. Is the system working exactly as designed? A bad loss. Broke rules, lost money. Painful, but at least the lesson is clear. And then the killer. You broke your rules, and the market paid you anyway. This is the most dangerous trade in all of trading. Because your trading account went up, your brain logs it as a success and it wires in the exact behavior that will blow you up later. One of the worst habits I ever built. I broke every rule I had, I got paid for it and spent the next few months trying to repeat it. So here is the actual system, a simple sheet every single time. Entry, stop, target, the levels you planned, where you actually got filled, so you can see the broker tax. Results in R. A dollar amount changes with your account size and your risk, so it tells you nothing on its own. And the one that matters most, rules followed, yes or no, 1 box, no excuses, no mostly, that's it. The rule is simple. Every trade gets logged before you close the platform. Miss one and the whole sample is contaminated, because the trades traders forget to log are somehow never the good ones. So now you got clean data, but data just sitting in a spreadsheet does nothing. Most traders, when they are losing, guess at why. Maybe my strategy is broken. Maybe I need a new one. The review system replaces that guess with a verdict, and it comes from one brutal filter. And remember how I said this whole thing can make you money while you sleep? This is a big part of why, and we'll get to how exactly it runs without you near the end of the video. Take your last 100 trades and split them by that one tag from the data system. Rules followed, yes or no. Then throw away every no. Every rule break, gone. And look at what's left. Only the trades where you did everything right. Now look at the results of just those. If those clean trades are profitable and your data is big enough, your strategy works. You don't have a strategy problem, you have a you problem. And that's the best news you will ever get, because a you problem is the most fixable problem in trading. That's the entire next system. If even your clean trades lose money, then no amount of discipline will save you. The edge itself is dead, now you need to go back to system 1 and rebuild. The review system does one more thing. It hunts patterns in your bad trades. Maybe 80% of your bad trades happen at Friday afternoon. Maybe it's always after a winner, or always the 3rd trade of the day. The data won't just say you broke your rules. It will say exactly when, so you can build a wall there. Friday afternoons? No trading Friday afternoons. That single rule found in the data can flip a red month green. And the last job of the review system is knowing when to actually quit a strategy. Remember earlier when I said you won't know if a losing streak is normal variance or a dead edge? This is how you know. You need a kill line you set in advance. Not I feel like it's not working. a real threshold. That number is decided cold, before you are emotional. So a normal losing streak can't scare you out of a good system, and a dead one can keep you trapped on hope. Listen, if you watch this far, you're really serious about trading and actually getting results. That's exactly what the 21-day trading reset was built for. Our 60 lessons, community, personalized troubleshooting, and a complete framework for tightening every part of your trading process. And it's completely free. So far you built 5 systems that can fail on their own. There is only one thing left that can break them. You. So the mindset system isn't about being stronger. It's admitting we as humans are by design not, and building walls so you physically can't reach in. There are 3 main enemies trying to make you fail. Enemy 1, the industry itself. Your broker gives you a one-click buy button and leaves your money blinking at you 24/7. 100 Telegram channels promise the holy grail. The entire industry profits when you act. More trades, more courses, more accounts. It is engineered to keep your hand moving. The counter is friction. You log out after every session, you write the password on paper and put it in other room, so checking the market is a walk, not a click. You make acting on impulse so hard that you just don't. Enemy 2, everyone else. You are short and your favorite guru just posted guaranteed long. Your timeline is full of people screenshotting wins and 5-figure payouts. The counter is a wall around the noise. During your trading window, Discord, Twitter, Telegram all closed. And outside of it, you unfollow every guru and signal channel and scrap the next strategy content out of your feed for good, because the edge you already tested can't survive a feed screaming that something else is better. Look, your edge survived 300 backtested trades. It shouldn't die because Crypto Wolf official posted a rocket emoji. Enemy 3, your own mind. This is the final one, and it never stops. The boredom that makes you invent a trade just to feel something. The urge to make your money back after a loss. You cannot out-discipline your own brain forever. The tank runs dry. So the counter is to remove yourself from the moment of weakness entirely. Alerts on your levels. Chart closed until one fires, so boredom never gets a screen to act on. The live trade handed to a trade manager EA or set as orders the second you enter, so fear never gets to touch a running position. This is what I meant by making money while you sleep, by the way. You find a setup, you enter and walk away. The machine will not panic. Notice the pattern. Not even one of these is try harder. Every single one removes the option to screw up. That's the difference between discipline and design. Discipline rounds out. Design doesn't. So now you have a complete machine. 6 systems that find an edge, protect it, execute it, measure it, and keep your own hands off of it. But the last system is the one everyone wants to skip to, and the one that blows up the most accounts. Scaling. Because here's the trap. Every instinct tells you scaling means bigger. Bigger size, bigger risk, bigger payouts. But real scaling does the opposite of what it feels like it should. 3 rules, and all 3 feel backwards. Rule 1. Take the money off the table. Don't compound it. Your instinct says leave the profit in, trade bigger, snowball it. But on a prop account, that profit isn't yours until you withdraw it. It's sitting inside someone else's drawdown rules, one bad streak from being deleted. Or the prop firm can shut down. Or you can hit some sketchy daily limit. So pull your payouts the moment you can. Part of it pays for your life, the rest doesn't grow the account, it buys more accounts. Rule 2. Scale wide, not big. The obvious move is to take your 100k and push for 500k. But one account means one set of rules, one company that can change the terms or fold overnight. Ask anyone who was with my Forex once. Or me. Remember the 300k lost capital I mentioned earlier? That was skilled funded trader. Even my students lost funded accounts with them. So instead of one big account, you run several. That one mechanical entry you perfected in the execution system, a trade copier fires it across 3 200k accounts at 3 different firms at once. Same screen, same time, same effort. 3 times the payout. And if one firm dies, you lose 1/3 of your income, not all of it. Rule 3. The bigger you scale, the smaller your risk percentage gets. You already know why. The dollars get heavier even when the percentage doesn't. So here is the actual move. On a smaller account, you might risk 1%, but for every 200k in capital you add, you cut your risk size by another 5 to 15%, whatever keeps the dollar amount in a zone where you stay calm. And here is the part that ties all of this together. Most people think these are semi-separate steps. Do one, move to the next, done. They are not. They are a loop that catches its own failures. Watch how it works under real pressure. You scale up, system 7, and the bigger numbers shake you, so your execution slips. A crack in system 3. You don't notice it in the moment, nobody does. But the data system logs every trade, system 4, so the slip gets recorded whether you saw it or not. Then the review system finds the cluster, system 5, and points at exactly where you are breaking. And the mindset system builds the wall, system 6, so it can't happen again. The failure starts at the top and gets caught at the bottom automatically. That's the difference between a trader with 7 habits and a trader with a system. You don't have to be perfect, because none of us can be. You just have to build the thing that survives. You are not being perfect. And the pure fact that you made it to the end already puts you ahead most traders. Because while they are hunting for the next lucky trade, you just learned how to build the machine that doesn't need luck. But the system only works if you actually stick to it. And if you steal bail every time you hit a drawdown, watch this next, because that's the only thing that will break everything you just built.